Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news the chaos at the Kabul airport has cast a pall over markets today. But elsewhere, positive economic news has generally been reported, and Powell's Jackson Hole speech is close now. Actual US jobless claims fell again last week to under 300,000, the first time it's been below that level since the start of the pandemic. That takes the actual number of people on these claims to just under 2.8 million, also the lowest since the start of the pandemic. The latest regional Fed survey, this one from the Kansas City Fed, shows a solid expansion continue in that district. Just like other surveys, price movements remain very elevated, with this one reporting prices received rose to a survey high in August. However, at the same time, 20% of these firms noted that activity was falling away due to the impact of Delta COVID. The South Korean central bank raised its policy rate yesterday by 0.25%, the first Asian central bank to do so, and in fact the first central bank of any developed country to do so since the start of the pandemic. And Hong Kong reported strong export growth for July. While the rise above July 2020 was always going to show a good result, the rise above July 2019 was equally impressive. Buyer wariness about getting goods during the global shipping woes is drawing activity forward, so these high levels may not be all they seem. But while there may be a sense that the Baltic Dry Index is topping out as a measure of the cost of ships in the bulk trade, there is certainly no relief in the cost of container freight. The cost of container freight out of China rose another 4% just last week alone. The only softness is being seen in the transatlantic rates. Unless you're now prepared to spend more than $14,000 per container trip, you're unlikely to find a shipping line willing to take your order. For popular routes like Shanghai to Los Angeles, it's more like $16,500 one way. Bidding wars are underway in this frenzy. And now there are reports that the Chinese authorities are concerned about these rate rise distortions and seeing what they can do to end and alleviate the problem at their end, one that could well squash their export trade. US Treasury 10-year yield is little changed today at 1.34% and holding its recent rise. And the price of gold is little changed today as well, up just $3 from this time yesterday and now at $1,792 an ounce. And oil prices have slipped slightly by about 50 cents a barrel. So in the US, they're just under $68 a barrel, while the international Brent price is just over $70.50 a barrel. And the Kiwi dollar opens today slightly softer at 69.5 US cents. Against the Australian dollar, we're marginally firmer at 95.9 Australian cents, and against the euro, we're little changed to 59.1 euro cents. That means our trade-weighted index starts today fractionally softer at 72.8 and in the middle of the 72 to 74 range of the past 10 months. We welcome your feedback on these issues. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.